Good afternoon, everyone, and welcome to today's webinar on the role of compliance and due diligence in global payments. We're delighted to have you join us for what promises to be an insightful and practical discussion. I'm Oluwaseun Oladimeji, Director of Business Growth at Blue Bulb, and yes, I'm your surprise host for today. Life through our original host, a plot twist, but as they say in global payments, transactions must go through. So while our colleagues or our host is handling business offline, we'll handle the brilliance of this session online this afternoon. Before we dive in, a few ground rules. Please keep your microphones muted throughout the session and use the Q&A box to drop your valuable questions, comments at any point. We promise to address as many as possible during the dedicated Q&A segment. This webinar is brought to you by Blue Bulb in partnership with Petstone and Grace. Global is a global payment partner for African businesses. We simplify cross-border payments, empowering companies to transact seamlessly, grow confidently, and scale globally with ease. Our services include payings, payouts, multi-currency support, and treasury management. Before I call on the keynote speaker, we also have our panelists here today, Toyosi Egunjobi, who is a global compliance specialist. Toyosi, can we have your video so our audience can connect with you? We also have with us Alexios Mwankwo, who is Group Head for Risk and Compliance at Blue Bulb. Alexios, it's so nice to have you join us. Thank you both, our panelists, for joining us. Now it's my pleasure to introduce our keynote speaker, Mr. Ugochukwu Obi, who will be speaking on the all too important role of compliance and due diligence in global payments. Mr. Ugochukwu Obi is a partner at Petstone and Grace LP and heads the Emerging Technologies, FinTech, and Private Equity Practice Group at the Nigerian commercial law firm. He's a legal expert specializing in ICT law, fintech, private equity, and mergers and acquisition. Mr. Obi is a public voice on the digital economy, contributing to conversations and thought leadership on subjects like reverse factoring, digital banking, and Africa's technological future. Dear audience, please join me in welcoming our keynote speaker, Mr. Ugochukwu Obi. You can drop a clap emoji on the comment section. Mr. Obi, over to you.
Okay. I'll start with the opening remarks on behalf of my law firm, Petstone and Grace. Good morning, good afternoon, good evening, depending on where you are joining. Distinguished guests, colleagues, and friends. On behalf of Petstone and Grace, it's my pleasure to warmly welcome you to this timely webinar, co-hosted with our partners at Blue Bulb on the theme, the role of compliance and due diligence in global payments. In today's world, money moves faster than ever across borders, currencies, and platforms. Yet, while the speed and scale of payments have transformed the way we do business, they have also amplified risk from financial crime and regulatory gaps to operational vulnerability that can shake the entire global economies. This is why compliance and due diligence are no longer optional. They are strategic imperatives. They are the unseen engines of trust that allow innovation in global payments to thrive. Without them, cross-border transactions risk collapsing under the weight of fraud, penalties, or reputational damage. At Pagestone and Grace, our work across fintech, banking and finance, private equity, and e-commerce constantly reinforces a simple truth. The strongest financial systems are built not only on technology, but on trust and transparency. Compliance and due diligence are what convert innovation into sustainability, ambition into credibility, and transaction into lasting relationships. Today's conversation promises to be both practical and forward-looking. Together with Bob and our distinguished panel, we will explore not only regulatory expectations, but also the opportunities for businesses to turn compliance from a cost center into a competitive advantage. So whether you are a regulator, a payment provider, an entrepreneur, or an investor, the insights shared today will equip you to navigate the complexities of global payments with confidence and clarity. Thank you for joining us, and we look forward to a rich and engaging dialogue. Thank you.
Thank you so much for setting the tone, Mr. Ogochukwu Obi. We are queuing up your presentation now, and I think in another 2 to 3 minutes, we would have your slides ready for your keynote presentation. Mr. Ogochukwu Obi, please, can you hear me?
Yeah, I can hear you. Please,
Absolutely.
I don't know whether they can project.
The slides are being projected as we speak. As we speak, sir.
I don't know. Can I start or should I wait for
Yes,
the slides to come up?
Mr. Obi, please start. Please start.
Okay, okay, okay. Thank you, our distinguished guest. Uh, as I said in my opening remarks, this topic we are dealing today is very timely, and I will be taking the keynote speech on the role of compliance and due diligence in global payments. The first slide, my first slide is on introduction. And after the introduction, you believe, you agree with me that global payments move at the speed of light, but compliance is what keeps them legitimate. So what this means is that while technology allows money to move quickly across the world, it is the rules and regulations which is the that ensure these transactions are safe, legal, and trustworthy. There is a saying that speed without control can create chaos. So from this quote that says that they move at the speed of light, but compliance is what keeps them legitimate, we will need to talk about what global payments, what features that drive global payments before we come to compliance. Global payments are fast, borderless, and digital. By being fast means I can sit here and send money to someone in the US and the money will be received instantly. This is an innovation that has come up in global payments. But if I go to the traditional banks, to do wire transfer, it might take up to 2 to 3 days to receive that money. So that is some of the information in today's global payment. Then you agree with me too. According to McKinsey's global payment report in 2023, it says the report says that over 60% of global transactions today are now processed in rate on the same day. Then if you talk about global payment as being borderless, means that with payment platform that we have today, including payment platforms like Google, it connects people across countries and currencies without needing a physical presence in that country. I've said that before. As a soft developer, I can develop a solution in Nigeria for a client in US. Then I can sit in Nigeria and receive my payment from that client in US. That shows that global payments today is borderless. Then digital, global payments are digital, meaning that most payments now are cashless. They are relying on mobile apps, cards, and digital wallets. We all know M-Pesa in Kenya. With M-Pesa, you don't need to have a bank account to send and receive money. That has again started happening in Nigeria with the likes of digital payments service bank like Momo and Smart Card. You don't need to have a bank account for you to send and receive. So all these things are some of the essential attributes or features of global payments. They are fast, they are borderless, and they are digital. Then if we look at all these features of global payments, you will agree with me that these the same qualities also make global payments vulnerable to fraud, money laundering, and misuse if not regulated. And that's where the compliance second leg of the coach, which I stated at the beginning of this presentation, will come in. Compliance is the guardrail of legality, stability, and trust. So by being by legality, I mean that compliance ensures that payment activities meet law and regulations. So if you are a Nigerian fintech, before you can start offering international remittance services, you are required to have IMTO license. So that's where compliance comes in. Then stability. Compliance prevents systemic risk in global finance. We all know about AML, anti-money laundering rules. The essence of AML laws is to stop cartels or teller groups from channeling funds into unsuspecting banks, which could destabilize the entire financial ecosystem. Then the third one is trust. If we don't have compliance, customers, you and I, we won't feel comfortable using a particular platform to transact. So compliance brings about trust, but because by trust, customers, regulators, and partners only trust a payment company that follows the rules. Then we move over to why compliance matters. Please, can you go to the second slide? So here, what we are trying to portray here is that compliance is the legal foundation of trust in every transaction. No matter how fast or innovative a payment system is, people, that is consumers, regulators, and businesses, will only use that solution if they believe that the system is safe, lawful, and transparent. Without compliance, even the most innovative innovation risk being shut down, fined, or mistrusted. So for me, think of compliance as the license to operate in the payments industry. For me, compliance is like a passport. It's like the way you have a passport, you can travel across many countries. That's what compliance will do for you in the global payment system. With that passport, you can operate across jurisdictions. Then under the compliance, we have some regulatory pressures in global payment. And the essence of these regulatory pressures is to bring sanity, bring stability in the global payment space. So you have first of these regulatory pressures, what you call the financial action task force. So they are the international body that sets international rules around around money laundering. So if you are a fintech in Nigeria, you want to connect with an EU bank, you must first meet with the FATF standards on anti-money laundering. Then, and that's the reason why countries like Iran, North Korea, they often face trade restrictions in terms of payments, because in those countries, they don't follow these AML rules. And most times, if you are doing payments, cross-border payments in those countries that I mentioned now, most times it's very impossible for businesses to connect with global banks of routing payments in those countries. Then secondly, you have the EU AML directives. So these EU AML directives require banks and fintechs to perform detailed checks on their customers. And these detailed checks are what you refer to as KYC and EED, KYC for the customer and enhanced due diligence. Example of this EU AML directive is what, in the course of my presentation, I will focus more on it. That's bank. They ignore due diligence in one of their Estonian branch, and this led to 200 billion, allowed 200 billion in suspicious flow from certain quarters. This became one of the Europe's largest AM scandals that have happened to date. And in 2022, EU regulators fined banks in EU a total of $1.6 billion for AM failures. So this would show the extent of consequences that will flow from where, as a fintech, you are able to do the necessary checks on your customers or on your merchants before you onboard them for business transactions. Then we have the NDPA, Nigeria Data Protection Act, and General Data Protection Regulation of the EU. What this does is to protect sensitive financial data of data subjects when transacting financial transactions. The GDPR and the NDPR protect customer data, so payment companies must show how they collect, store, and use personal data. This is very important because any breach of this leads to huge consequences. For example, under the GDPR, companies can be fined up to 4% of their annual global revenue, which is very huge. Then finally, we have the US Office of Foreign Asset Control. This deals with sanctions compliance. OFAC prohibits transactions with blacklisted individuals, companies, or even countries. For example, in 2019, Standard Chartered Bank was fined $1.1 billion for violating US sanctions by processing transactions linked to Iran, Sudan, and other restricted countries. Even if you are not if you are not a US company, you are bound to comply if you want to access the US dollar system. Please the first slide. At the first slide, you will be looking at the risk landscape of payments. As I mentioned earlier, global payments are fast and borderless, but this speed and reach can expose businesses to major risk. The three biggest challenges are money laundering, sanctions, and data/cybercrime liability. So I'll take them one after the other. Money laundering risk. When we talk about money laundering risk, what we are saying here is that criminals try to clean dirty money by moving them through legitimate payment system. And if regulators discover that the company's systems are used for laundering, even unknowingly, the company faces massive fine and reputational harm. For example, I mentioned this before. HSBC was fined $1.9 billion in 2022 for allowing drug cartels in Mexico to launder money through its US operation. Even in Nigeria, banks and other financial institutions like FinTech must follow CBN, AML, CFT regulations to avoid being by fraudsters. The United Nations estimates that between 2 to 5% of global GDP, which is about $800 billion to $2 trillion each year, is laundered through financial systems. So the takeaway for us here is that payment companies that fail to monitor suspicious activity become easy targets for criminals and easy targets for regulators too. So there are two things here. If you fail to put a mechanism in place, you will become an easy prey for criminals, and at the same time, the regulators will become heavy on you. Sanctions and cross-border restrictions. Some countries, individuals and companies are on international blacklists. What this means that doing business with them, directly or indirectly, is illegal. For example, some countries like Iran, Sudan, North Korea, Afghanistan, they are already on the OFAC sanction list. So if you are a fintech company or bank in Nigeria, you are doing business with companies in those countries, you are flouting the international rules on money laundering because those countries are already blacklisted. So what it means is that if you are doing business with any company in those countries, you have to do an enhanced due diligence on those companies to make sure that they are not on the blacklisted list, on the sanction list. Even a single payment processed in violation of sanctions can trigger $1 billion penalties. For example, I've mentioned this before. Standard Chartered Bank was fined $1.1 billion in 2019 for violating US sanctions by processing payments linked to Iran, Sudan, and Syria. So Any Nigerian businesses that trade internationally must check the US OFAC and EU sanction list before processing payment. It's very, very important. About 40% of international payments are USD denominated. This means US sanction laws often apply worldwide, even to non-US companies. So most international trade are settled in USD. So if they are settled in USD, what it means is that this offered sanction list have tendency to apply worldwide. So if you are doing business like a other payment, the first thing you would do is any businesses you are transacting with or individual, you have to check the offered sanction list to make sure that they are not blacklisted. So the takeaway for us here is that for global payments, ignorance of sanction is not a defense. Companies must actively screen transactions. Then the final risk is the data privacy and cybercrime liability. You agree with me that payment involves sensitive customer data, names, bank details, and card numbers. So we are in a situation where this data, sensitive data, are mishandled or lost. This can result in any fine, endanger the trust of customer and investors. It can lead to license suspensions or even expose executives in company liabilities. And why does this matter? Hackers target payment platforms because of the rich financial data they hold. At the same time, regulators impose strict data protection rules. We all know about the Nigerian Data Protection Act. It imposes strict data protection obligations on banks, fintechs, and financial institutions. And the reasons are not far-fetched. Banks and fintechs sit on huge sensitive financial data of you and I. So it goes on them to protect those data strictly. For example, in 2021, Amazon was fined 746 million euros under GDPR for data misuse. Flutterwave reported a 2.9 billion fraud in 2023, highlighting the cyber risk fintech faced in Africa. According to IBM, the average cost of a data breach globally is $4.45 million. That was in 2023. Then in highly regulated sector like finance, the cost can be much higher. If the average cost of a data breach globally is $4.45 million across sectors, in finance alone, it will be like 3 times this cost. And that, signal the need to do and be diligent in the way we handle data that are in our possession. So the takeaway for us here is that protecting data is no longer optional. It's a legal duty. One breach can wipe out the edge of trust you have built as business. The first slide, we'll talk about due diligence as a compliant business. In global payments, due diligence means carefully checking who you are doing business with, where their money comes from, and whether their transactions are legitimate. It's like doing a background check before letting someone into your house. Maybe you are a landlord, you want to let out your house. So due diligence is like conducting a background check on a tenant before allowing them to lend your house. So it's the same thing we are doing when you are conducting a payment. Key tools of due diligence. One is Know your customer. I've mentioned this before, so I will just run through it. Know your business. Enhance due diligence. Enhanced due diligence comes in when you are dealing with high risk customers, industry or country. So when you are dealing with politically exposed person, it's not the same level of due diligence you do on an ordinary individual that you apply when you are dealing with PEP, politically exposed person. Role of lawyers in due diligence to guide companies through regulating minefields. For example, if a fintech wants to expand into other markets, as a lawyer, help you to guide you through the compliance checklist or requirements in those markets. Will help you as well prevent litigation, fines, and reputational harm. My time is almost up, so I have to quickly run through the other slides. Can you take me to slide 5? The Danske Bank AM scandal. I mentioned it before. The significance of this AM scandal was that this inactivity on the part of a branch in Estonia to be able to conduct AML on where the money paid through that branch came from was what led to the biggest AM scandals. But that bank was later fined a huge sum of money, and that scandal affected the share price of that bank in the Europe at that time. That bank used to be one of the largest banks in Europe. But what happened in a tiny branch somewhere in Estonia affected that bank, the bank reputation. It affected the financial fine that the bank that paid that time. So the consequence is that there is that need for businesses to be strict in terms of how you conduct your AML when you are dealing with businesses. Please, can you go to slide 6? So here we are looking at compliance as a growth strategy. As mentioned before, compliance is like a passport to operate globally. It creates investors' confidence as well as customers' trust. We can give an example of Paystack. We all know Paystack. It was because of the way Paystack operated from onset in terms of building investment around compliance and makes Paystack to attract the investment he attracted from a Stripe, about $200 million that he attracted. So that shows that if you are compliance in if you are compliance driven as a business, yes, it might be costly, but in the long run, you will benefit from it. Can we go to the second slide? The future, 3 Lego pillars. So what we are trying to say here is that global payments are changing very fast. For example, we have new technologies today like crypto, central bank, digital currency, CBDC, artificial intelligence, and instant payment are pushing the law to catch up. So to keep payments safe and legal, 3 big Lego pillars, I imagine. One, there is something we call anticipatory regulation. That means that regulators are not just reacting to problems or they happen, but they are trying to create rules ahead of time for new technologies like cryptocurrency, CBDC, and AI. We all know what cryptocurrency means, like Bitcoin. They are like a digital money that is not controlled by any government. And one critical attribute of cryptocurrency is that it moves across borders instantly, or it can be very risky because criminals sometimes use it to hide money. And it is because of that the EU in 2023 passed a new regulation called Market in Crypto Assets Regulation. So that regulation is to give legal clarity for crypto exchanges, stable coins, and before risks get out of hand. We all know very well in July 2025, President Trump passed the Genius Act in the US to regulate payment statements. Then we have CBDC, central bank digital currency. They are like the digital currency of a country's money. In Nigeria launched the first CBDC in 2021 called e-Naira. And CBN has gone a step further to issue a regulation called e-Naira Regulatory Framework to govern how banks, fintech, and individuals can use it. And the good thing about e-Naira is that merchants are now allowed to accept payments in e-Naira, just like cash, but they must follow anti-money laundering rules. We all know the big elephant, which is the artificial intelligence, technology that allows machines to think or make decisions like humans. So with AI, things that we do manually can now do it through AI digitally. So all these compliance issues that we are doing manually, with AI, it can help you scan thousands of transactions per second to detect unusual activities that might signal fraud or money laundering. In 2024, EU passed the first World AI Act. And the good thing about this EU AI Act is that it categorizes AI systems in terms of risk. So it classifies them in terms of low risk, high risk, on unacceptable risk. Then we all know about instant payments. Instant payment is happening locally. It's happening cross-border today. So the likes of Paystack of local wave can enable merchants in Africa to get payments instantly. The same thing is happening in the US market as well. So what we are trying to say here is that all need to adapt quickly to new systems. So the era that we say that technology at space regulation might not be happening any longer, because most regulators around the world now are trying to go beforehand to create rules, to enable new technologies to emerge. Smart compliance, instead of manual checks, compliance is becoming AI powered and technology driven. So you can use AI to verify ID, match faces with documents, and flag fake information more faster than humans. The same thing with anti-money laundering. With AI tools, you can monitor millions of transactions in real time and flag suspicious patterns, like when somebody suddenly receives large payment from high-risk countries. Then finally, can you go to the final slide, please, because of time? So the big question here is compliance a cost or an investment? For me, compliance and investment, because the investment is costly, but in the long run, it pays. Where you decide not to invest in compliance, in the short term, you might think that you are gaining, but in the long run, you'll be a loser. So I will end by saying the future of global payments will be written in compliance. Thank you very much for listening.
Absolutely. Thank you, Dr. Ugochukwu. I know you're not a doctor, but with that level of presentation, you had done justice to a complex subject like compliance in about 20 to 25 minutes. And I know that we are all the better for it. Let's just continue to harness our questions and comments in the Q&A section. And once we get to that segment of this webinar, we will address them accordingly. We'll take a short break and immediately dovetail into our panel session. I'm sure Toyosi Egunjobi and Alexios Nwankwo are gearing to take us on to the next level of this webinar.
Purchstone and Grace has been at the forefront of legal excellence in Nigeria and beyond, evolving from modest beginnings into one of the country's premier commercial law firms. We are celebrated for our innovative approach, profound legal insight, and a global perspective that set us apart. Our true strength lies in our exceptional team, guided by a dynamic group of 7 partners across multiple locations. We specialize in simplifying complex transactions, identifying untapped opportunities, and ensuring seamless deal completion, all while adhering to the highest standards of legal and regulatory compliance.
Okay, so we will be moving to our panel session now. And joining me today are 2 brilliant minds who live and breathe compliance in practice. First, we have Toyosi Egunjobi, whose work has shaped regulatory frameworks across multiple sectors. Toyosi brings a wealth of experience in navigating complex compliance landscapes. And then we are also joined by Alexios Nwankwo, who is known for turning policy into practice. Alexios has led transformative initiatives that align business strategy with regulatory expectations. Together, we'll explore the evolving role of compliance in today's dynamic environment, unpack key challenges, and share actionable insights for practitioners and leaders alike. My dearly esteemed audience, please help me make our panelists welcome by using the hand clapping emoji. Welcome, welcome, welcome. Toyosi.
I'm here.
Hi, Toyosi.
Thank you so much.
Hi, Alexios. Hi. Now let's get into some compliance related questions. And Toyosi will be starting with you. In your opinion, why is compliance and due diligence more critical now than ever in global payments?
All right, thank you very much for that question. Hi, everybody. It's a pleasure to be here. So from my perspective, there's heightened regulatory scrutiny and then fragmentation. So because of issues that have happened in the past with respect to non-compliance, money laundering, and terrorist financing and other financial crimes, regulators have become more serious about ensuring that compliance and due diligence is part of any cross-border or any financial services business. So regulators have become more serious, and that's one of the reasons. Another is because, of course, there's a surge in financial crime and fraud. So any business or any business that is, serious about ensuring that they protect their reputation, also ensure consumer protection, they have to have this in place as well. So this is also very, very critical. Then also just helping to minimize, reputational damage and also financial risks. More businesses are taking compliance and due diligence seriously, because now the fines that are attached to any form of infractions or non-compliance, they are huge. So the keynote speaker mentioned certain fines and different penalties. Apart from fines, there are also other penalties that are attached. You can lose your license. Imagine spending so much money trying to build a reputation, and because of non-compliance or some infraction, you lose that license. Not only do you lose the license, you lose investors' trust, you lose customer trust, and then it will take a long time. If that reputation is damaged, it takes a long time for you to be able to repair such damage. So regulatory scrutiny, surge in financial crimes, reputational damage, preventing reputational damage and financial risks. This, in my opinion, is the reasons why people are, why due diligence and compliance is more critical now than before. Thank
Absolutely,
you.
absolutely, Toyesi. And again, just to reinforce what our keynote speaker had said about looking at compliance as an investment, because what's the point of building so far? And then because of certain compliance issues, all of the works, maybe even a decade or multiple decades of hard work, of growing, of building your brand is just washed down the drain due to one compliance infraction. So very, very spot on to your say. Alexius, we would like to also hear your opinion on this line of conversation. What's in your
Yes,
view is the reason why compliance and due diligence is more critical more than ever in global payments?
yes. Taking it from where Toyosi stopped, Toyosi again referred to our keynote speaker, and she mentioned the issue of reputation protection. And I want to add that uh, compliance today is assuming so much complexity, and that what I will advise everybody is what we have done in Blue Ball, taking compliance as priority, taking compliance as part of the strategy, compliance as a strategy, because the various regulators are not waiting for us. They will not wait for you. Regulators are asking you what they are telling you what they want from you. They are not even giving you time. In our various interaction as a cross-border border payment company, dealing with CBN, dealing with FinTrack of Canada, and dealing with FCA of UK and FINTRA of US, across regions, across regulatory jurisdictions. It is, in fact, evident that what we need in the world of today is not complying with what regulation have just told us. It's not only complying with what regulation have said, it is also about proactive compliance. So proactive compliance is about waiting. It's about putting your house in order before you are asked a question, just like we are adopting from our blue board perspective. So more than ever, more than before, compliance is urgently needed, and it's advisable for every organization to adopt compliance as a key strategy in all of its business. Thank you very much.
Thank you, Alexios. And it's so heartwarming to hear that Blue Bob remains at the front burner, anticipating regulation in ensuring that we are conducting business or pushing payments for African businesses in a globally compliant manner. Toyosi, I'm back to you. What are the top three compliance risks that organizations must prioritize when expanding across borders?
Can I make it, if I'm permitted, can I make it four? I will try and keep it as simple as possible. So, with compliance risk, especially with fintech, a lot of us focus on anti-money laundering and a number of things, but there are other things, other factors, right, that you need to consider. So while regulators in different jurisdictions are trying to harmonize AML regulations and CFT regulations, and as well as anti-bribery, there are other things, factors that need to be considered, like tax and employment law risks. So the tax and employment law or regulations that apply to Nigeria, for example, they will be different from what applies to the US, to Canada, to the UK, and other countries. So you cannot try to fit that in a box and say, oh, what the regulations or the requirements that apply to my employees in Nigeria, you then try and apply that across board. So you need to understand the tax requirements, the employment laws, labor laws that apply in countries before you start to hire people. What do these countries say about distributed teams? So hiring remote workers. What does this say to these countries? Because, for example, as a Nigerian, or rather as a Canadian entity, right, you employ Nigerians. How do you manage the taxes? How do you manage the employment laws? What do they say about maternity leave and paternity leave as well? All these different countries have their own requirements. One other factor that a number of businesses forget is around marketing regulation, right? Because consumer protection is very, very important, especially in the US, in the UK, in Canada, and other Western countries. What marketing or adverts are you putting out there? Your social media platforms, your LinkedIn, your promotions. How are you communicating the different marketing strategies? What are your materials like? Because consumer protection, like I said, is very important. So you need to look at marketing and promotion regulations in different countries. I'll use crypto for example. In the UK, the way you cannot actively market crypto investments to UK customers. You actually get fined by the FCA. So how do you go around those issues? So marketing regulations in different countries, that's very, very important, especially for businesses that have entities in all these different countries. Of course, your regular AML, like I had said before, AML, anti-bribery, CFT, what are the requirements? So while they are foundational requirements, different countries also have certain additional requirements that you need to understand and you need to be familiar with. Data protection and security as well. How do you store your customer data? When there is a breach, how do you handle this? Those are the different things that need to be looked into. These risks are very, very important to the regulators, and you can get heavy fines, for not declaring certain reports. Also, one of the things that we need to consider is regulatory reporting. So your suspicious activity reports, transaction thresholds. So in Australia, for example, if your business is heavily based on cash, you need to report transactions above $10,000. While some countries don't require, unless it's a suspicious transaction or suspicious activity. In the EU, any transaction at all needs to be reported. So any transaction from €1 needs to be reported. In the US, they just really, US especially now, the US, while they are federal laws, I say that the USA is the most united country, because there are federal laws and there are state laws that you have to adhere to. So even when you're getting your license, you have to get licenses on the multi-state level. So just understanding all the regulatory requirements in these different countries is very, very important. Thank you.
Thank you so much, Toyosi. Thank you. Thank you. I asked for 3, but I think you spoke around 7 or 8 various risks to consider. And I believe that our audience we are more richer in terms of our knowledge base, in terms of expanding across multiple jurisdictions. Thank you very much, Toyosi. But we would have to manage time a bit better now. Alexios, over to you. If you had to give business leaders a 90-day compliance action plan, what would be the immediate priorities? Thank you, Alexios.
Okay.
And please, to 1 minute if you can. Thank you.
Okay. Yes, thank you. I'll take it from where Toyosi stopped. And coming from looking at where we in Blue Bob have taken it from. First, Toyosi talk of the business risk within the environment and the risk to be considered. So first, you do your risk assessment. Toyosi was looking at, okay, the various states have their form of licensing requirement, and those are part of what we are going to consider in risk assessment.
we do our risk assessment, and that should be within the first 20 to 30 days. And when we have done this risk assessment, we should go into policy development and framework review, review existing framework to see whether they will take care, they provide for the risk we have observed in the course of our assessment and are able to manage place framework, the required framework, with the regulation that we are doing transaction with. And when we have done this, we acquire various technology required. Technology can be either we acquire a license or we do a subscription. In most cases, I always advise we do subscription, like in the case of Blue Bob, where some of our technological requirements, such as our and then in others we adopt development. Then when we have done that, I subscribe to training. We train our manpower. When we train our manpower, we'll be able to take care of the various risks and have perspective to it. With that, we are able to do well in preparing both the people, both the process and the technology for our compliance obligations as an organization.
Thank you so much, Alexios, for those powerful roadmaps. And it's just this is just a very enriching conversation on compliance. Thank you very much, Alexios. I'll be taking my final question now, and we'll start with Toyosi's perspective on this question, and then we'll take Alexios's perspective as well. So just to find out.
Or should I continue?
No, Alexios, can you hear me? No, we're good. We'll take Toyosi now. Toyosi, what should business leaders look for in a global payment?
Are you hearing me?
We can hear you, Alexios. We can hear you, Alexios. Toyosi, can you hear me, please?
Yes, I can.
Great. So, Toyosi, I'm coming to you. What should business leaders look for in a global payment partner to ensure compliance and due diligence standards are upheld? What should they look out for?
Apologies, can you please take the question again? I think there was a disruption, so I couldn't really hear.
So I was saying, what should business leaders look for in a global payment partner to ensure compliance and due diligence standards are upheld?
So first things first, you need to understand the reputation of your partner, right? In fact, before we even get to reputation, how do they follow regulations and regulatory requirements? Are they licensed? So oftentimes what happens is when we're trying to get licenses, we try to tick the compliance box, but operationally there are so many flaws. So on the face level, they say, okay, do you have your policies? Do you do this? Do you file your returns and stuff? And you say yes, right? Just to be able to meet those regulatory requirements. But are you doing those things operationally? So you have to look at things from the operational perspective of your business partners. Secondly, of course, what type of reputation do they have? Also, in terms of like liquidity and financial standing, I always advise my clients and people that I speak to, my friends as well in the industry, that you have to understand the financial soundness of your business partners. Corporate governance is also very important. Are you running a one-man show, or do you have like board of advisors and people who are your sounding board, and who can pretty much just pull your shirt back and say, oh, you're moving too fast, and then people who you are accountable to. In addition to that, how I would say finally, honestly, how do you treat your employees? How do you treat your customers? Consumer protection, employee protection as well, very, very important, because these are all the different things that actually add to the type of reputation you have as a business. You don't want to be, I would say Blue Bob, for example. Blue Bob would not want to be associated with businesses that are just constantly in the news for one infraction or the other. social media because they're not treating the employees great. Now, I'm not saying that there's a perfect system, but these are the things that you need to consider and things you need to look out for when you're trying to enter into a partnership. I hope I've been able to answer the question. Yeah,
Absolutely.
the way we need to. All right, thank you.
Absolutely. Alexios, can we have your insights on this question as well?
Yes, thank you, Toyosi. For me, I also look at it from the angle of the due diligence the partner is also conducting on me. I am not comfortable with partner I am conducting due diligence on, and he is just okay with whatever I request from him. The due diligence is meant to be mutual. It tells me how secure. It tells me how much risk management that partner is employing and how much exposure I will have relating with such partner. So I look so much about the partner's due diligence on me as we go on. Then I also look at what is this partner's reputation as far as a third party, a neutral entity's opinion is concerned. A neutral entity opinion is important because it tells us what the partner is with zero bias. And I would also look at the partner's regulatory environment. I will be harsher on a partner that is in a weak regulatory environment than a partner that is in a strong regulatory environment where for him to run his business, he must be compliant and must be seen to be compliant. Then I also will be comfortable relating with him. Thank you very much.
Thank you, Alexios and Toyosi, for doing justice to your questions. You had both emphasized the need to assess the reputation, the financial soundness, corporate governance, how the payment partner treats their internal stakeholders like their employees, and emphasis on the regulatory environment. And it's important to note here that Blue Book checks all the boxes. If you're talking about employee welfare, we are licensed, we are registered as a great place to work. We have our licenses in place, and it's very important that we have an anticipatory regulatory outlook when we are dealing with compliance across multiple jurisdictions, including Nigeria, Canada, and UK. Thank you so much. In my opinion, the conversations have been deeply thought-provoking, stimulating, and I know that our audience are gaining a whole lot from this session. We will play a few messages right now to allow our audience drop in their comments and questions. And after this very short break, we will navigate into our question and answer time. I'm sure our panelists and our keynote speaker are very eager to take on and address these questions. Thank you. We'll have
Bluebob, simplifying cross-border payments for African businesses.
I'd like to take our questions now. Our first question is on institutional trust. And the question says, how can African fintechs and financial institutions build compliance frameworks that balance innovation with risk management? How can African fintechs and financial institutions build compliance frameworks that balance innovation with risk management? And I'd like to call on our keynote speaker, Mr. Ugochukwu Obi, to please answer this question from our audience. Mr. Ugochukwu Obi.
Okay, please, can you repeat the
Can I take the
question?
question again?
Yeah.
Yes. So the question says, how can African fintechs and financial institutions build compliance frameworks that balance innovation with risk management?
Okay. So for me, the starting point is you as a business, as an organization, you must have first of all risk management framework, risk enterprise management framework. So in that risk framework, you must have your risk appetite in terms of what kind of risk do you want to, and what will be the threshold of that risk. That should be the starting point. Then once you have that risk management framework, innovation comes with risk, and that's why compliance comes in. Compliance comes in to regulate where this will be coming out from, those innovations. And that's why most times you have something like a regulatory sandbox where the regulator will call you, maybe you are a new innovator. What you are innovating has not been covered by regulation. They will call you, sit you down to be able to look through that innovation in a controlled environment, be able to see the risk and see where you can build risk mitigants around those risks. So that is the same thing you'll be doing as a business. What are your risk appetite? What are your risk thresholds? Then you now use compliance in-house to go around those risks that you have been able to identify. So in essence, you are balancing the two. You are balancing innovation with compliance, and at the same time, you are not slowing down on your innovation, but you are using compliance to take care of some of the risks that might be coming out of that innovation you are trying to do. So in terms of documentation, you must have robust enterprise risk management. Then you must have your compliance framework where all issues around corporate governance, where regulatory compliance framework be taken care of. So in that way, you can able to balance innovation and at the same time not complying with the regulatory requirements. Thank you.
Absolutely. So an effective handshake with internal and external stakeholders while ensuring that we continue to push the boundaries of innovation. Thank you. Thank you so much, Mr. Ugochukwu, for doing justice to that question. My second question will be taken by Toyosi. And Toyosi, the question reads, in today's global payments ecosystem, how does compliance serve as more than just a regulatory requirement, but as a strategic enabler of trust and business growth? Toyosi, over to you, please. Can you hear me?
Okay. Okay, so to answer that question, I believe that it helps build customer confidence. And then even your regulators as well understand that you are a focused business and you are, not just about building a business, but building a business that is right, that is customer centric. Also, sorry, that question caught me by surprise. So I'm also thinking about what else. So it creates a competitive advantage actually over other businesses. So when businesses are looking for partners, when customers are looking for who to deal with, a compliance focused or a compliance centric business is who these organizations or businesses and customers as well, individual customers and businesses will look out for. So it helps your investors, it helps your stakeholders, other shareholders as well, with confidence. I think that's like the only thing, the major thing. So trust and confidence that, okay, if I deal with this type of business, they will not cost me money, they will not cost me my reputation, and then they will not cost me issues. So yeah, I think that would be my response. Thank you.
Absolutely. I think in one of the slides by Mr. Ogochukobi, he had mentioned or inferred to the fact that compliance can be a strategic advantage, and that compliance is actually cheaper than non-compliance.
Yeah.
And so when customers begin to see your business as giving them that value in terms of helping them keep their gains in the long term, it's something to look forward to, it's something to invest in. So compliance is actually a unique selling point for compliance businesses, especially businesses outside the shores of this country, or businesses looking to expand into more regulatory complex markets. Thank you, Toyosi, for doing justice to this question. And so we'll be taking our last question because we're very mindful of time. And Alexios, you will take this next section. It says, thank you so much for the enlightening session for companies and professionals. How can they stay updated with regulatory changes to maintain compliance? We've been told that ignorance of the law is not an excuse. If your regulators catch you that you've made an infraction, the fines are significant, they are punitive. And we just want to know, and we live in a very fast changing environment. So, Alexios, nuggets from you, please. How do we stay ahead of the curve on compliance matters?
Okay. Thank you very much. To stay ahead, to be current on our compliance obligations, first, we need to have a direct link or relationship with our various regulators. Various regulators have platforms you subscribe to, they create alert system and everything, and we read up regulatory releases from them. Then another is we belong to professional associations and industrial associations and union, where regulatory releases are immediately circularized and across. Another is we have a conscious program of reviewing the regulatory publications, regulatory communication platforms, the sites, to see what have been placed within that period. Then another is collaboration and interaction. We collaborate across the department, then across the industry, and across our peers, professional peers, business peers, even our competitors, so that everyone is able to alert another or provide updates on regulatory releases and development. Then another one is attending sessions as this webinar that is going on, though organized by Blue Bob, attended by even those that are peers in the market, and you from one or two discussions, you come to realize that, oh, such thing as this exists. I have not done it. You sit back and you update it. So through those interactions, seminar, webinar, workshop, relating with regulators and everything, we'll be assured of being up to date in our knowledge of regulatory releases. Thank you.
Can I just add to that, if I can get like a minute to just add?
Absolutely.
Okay, so I'd say to businesses that are here, hire compliance professionals and lawyers. A number of times, businesses focus on business and money making first before compliance. Hire the professionals to do the job. That's why we're here. That's why we're here to serve you. It's very important not to compromise on the quality of compliance. People and tools that you have in the business. We are the ones that do the job. We're the ones that deal with the regulators. We're the ones that attend those sessions. We're the ones that can interpret the policies, the regulations, the laws, and also the guidelines. So speak to us constantly. Find us. We are here to serve you. Thank you very much.
Thank you, Toyosi. Thank you.
Thank you, Toyosi, and to our audience. I believe that our keynote speaker and our panelists have done justice to these questions. We want to, as we wrap up, we want to sincerely thank our keynote speaker again, our panelists, and our partners, Blue Bulb and Petstone and Grace, for making today's session possible. A big thank you also to our audience for your active participation. Our strategy is simple. Compliance is not a hurdle. It's an enabler of sustained growth in global payments. In fact, our keynote speaker has said compliance should be viewed as an investment. We'll be sharing the replay link and resources on our YouTube channel soon. And in the meantime, we urge you to please stay connected with us. Kindly follow us on all social media channels for more insights and future events. Thank you all. And remember, payments are cars on a high-speed highway, and compliance is the traffic light, speed limits, and seat belts. Wishing you a compliant Q4. And we hope that we would have you join us again at our next webinar. Bye for now. Thank you, everyone.
Thank you very much. Bye. Okay.